Everyone, welcome back to Fundraising Demystified. Today we have David Goldberg on the show with us. David, I'm very excited to have you on and share your story of founding Founders Pledge. Welcome to the show.
Thanks for having me. I'm looking forward to it.
Now, so you are an exited founder and you are now running an insanely amazing and very large scale nonprofit that's deployed over 1.3 billion. I would love for you to give the audience a little bit of context as to how you got there when it came from building your first company and selling that to going into philanthropy.
Sure. So I've had a sort of atypical journey in that I didn't go to university straight away. I worked in finance and then moved to Europe back in 2006 and started a company that I got very lucky with. And a couple of years later, I sold. It wasn't a technology company. There were no investors. It was bootstrapped. It made money pretty quickly, and I captured a nice moment. And 2.5 years later, when I sold it, I found myself with just more than I needed, having effectively won the life lottery. And I sort of really internalized my luck, and at the same time, sort of understood that if I had been born a different place, a different time, a different color, I might have had a really different experience. And it did feel a bit like sort of winning the lottery. And I sort of decided at that point that, having had this blessed existence, that if I didn't do something to rebalance the karma scales, because I'd had got lucky a bunch of times before, I was like due some tragedy. And I really did feel that, like if something, if I just kept making it about sort of the aggregation of more for me, then the universe was going to correct this mistake in some harsher way than I would do on my own, basically. And so resolved at that point that I was going to give away most of my wealth to charity, very naively thinking that it would be easy to do well. I'd spent a couple of months, looking at charities and giving away money and being a philanthropist. And I'd feel awesome and, really good about myself. And then I'd go on to the next project. And what I actually uncovered was this ecosystem of organizations that were extremely well-intentioned, set up for all the right reasons, but really poorly run, really poorly executed, and really ineffective on the whole. I started, trying to understand what charities actually did that changed the world, rather than the stuff that they say, which is, you affect a lot of people, or, you provide, books or electricity or water to this population, and as a result of that, their lives are better. What I wanted to know was, like, how much better are they as a result of this thing, and how many people are affected by it, and can you prove it? Like, are we sure that it was this charitable intervention that you've done that's actually made these people better, or was it something else? And the moment I got into the detail, the nitty-gritty with these organizations, the communication stopped flowing, really, and the questions went unanswered. And it sort of became a bit of a running joke, like, let's reach out to another charity to see if I can give them money and have them not really address my questions well. And what soon became clear was that this sector is basically broken. There are 10 million charities, which is a lot, like many more than we need. And a very small number of them are actually doing really important, counterfactually impactful work. And I couldn't really, in good conscience, at that point, because I didn't really understand which are the good ones and which were the bad, waste my money, with the hope that by lighting it on fire, the smoke did something good for the world. And that's sort of how it felt. And so I took a step back and realized, I have no idea what I'm doing. At that point, I was a high school dropout with no education. I decided I needed to figure out how to think better if I was going to work on this thing. And I didn't really want to, at that point at least, work on charity as a career. But like understand charity better. So I, decided I'd go to community college and figure out how to think better. And community college became, a 4-year, and then a 4-year became a PhD program here in the UK. Over the course of that time, I did figure out how to think better and sort of understood how the world worked, and sort of became a bit more numerate, both practically and theoretically numerate than I had been in the past. And decided that I was going to start an organization that fixed the problem that I faced when I sold my business, which is, I have these resources that I don't need all of, that I want to use to affect the world positively. How do I do that? And at that point, when I sold this business in end of 2008, there was no one really set up to help. And even a couple of years later, 5 years later, having left my PhD program, without actually getting the PhD, I still felt like there was not much resource for people who, looked like me, and who had, not billions of dollars of wealth, but a lot, enough that they could really make a dent in the world. And so, that became Founders Pledge. This organization basically tries to help people use their resources to impact the world positively, and gets them involved in thinking about philanthropy, giving back, really before maybe they have any right to, before they've actually made money. And so I had this idea that what if we could get people who had extremely, high potential wealth for the future commit to give to charity now, when they still are, practically poor people, even if they have like paper wealth in the form of, founder shares of a company. What if we could get them to commit some chunk of those founder shares to go to charity? It turns out we really discount the future very heavily. And so committing to give away something you haven't yet made that is still sort of theoretical, like pie in the sky, monopoly money, seemed intuitively to me to be an easier ask than getting extremely wealthy people who had already made it, who had been through the decade of grind, to give away something that's already in their bank account, which ostensibly was more painful. And that sort of became the basis of how Founders Pledge, operates.
And so that's, where I want to kind of, go back to is this journey of, very typical founder journey of coming into a problem, wanting to solve it, going to school to figure out how to solve it, and warming up your brain to figure out the solution. But this idea of, and kind of why I brought you, on the show is, we don't usually do nonprofits kind of thing, but I think the way you've done this is an incredibly innovative way. It's, lured me in to make the pledge. It's got me involved as a member. So full disclosure to the audience, I'm slightly biased in this conversation, but, I think what's fascinating is this catering to founders. What resonated with me was this idea that, this world is broken, because I totally agree. I just don't feel like I know a lot of charities, and I'm just like, they don't get the capital deployment and allocation strategy that is meaningful to me as a founder who's a micromanager, who's like in the weeds, founder mode all the time. And I felt that that's a unique approach which you guys have, and we'll get to this later in terms of how you guys fundraise and the amount of capital you deploy. But let's talk a little bit more about what this concept of the pledge is, and how that works, and just for some insights, like, from a scale of the membership that you have, and kind of like how many people are actually having these material events.
Yeah. So the pledge itself is pretty simple, and it's effectively skin in the game. It wasn't enough at the start to get people to commit to give. I mean, it was a nice, jumping off point, but getting people to just commit to give and then not helping them to give better sort of results in my situation, where you're sort of like out at sea without any land or boats in sight, and you're just sort of floating there, hoping you're going to sort of swim to some buoy or something. So the pledge itself is simple. It's a commitment to donate a percentage of your exit proceeds to charity. So if X, then Y. X being, if I sell shares in my company and make money personally, Y being, then I'll donate Z percentage of what I make, some percentage, to the nonprofits of my choice on a go-forward basis. And it's a pretty powerful statement to make and put in writing, and then have it sort of countersigned and be held accountable by another organization, us. So we have about 2,000 signatories now from 40 countries. They've pledged just shy of $11 billion. And the pledge itself, to my mind, should be the easiest decision that a founder makes in their day, right? Amidst a endless list of hard choices to make about like product decisions, monetization strategies, hiring, firing, design, culture, the stuff that just requires cycles. The idea that you're going to give away some small chunk of your extremely, good outcome to the things that you care about, and hopefully get tax relief for it, in most cases people do, should be just like one and done. It's a 5-minute, conversation with your partner, and then on to the next. But it's powerful because it really sort of starts to embed this idea that my success is not just accruing to me, the individual, but it accrues to the world, to people who are, from less fortunate backgrounds, from, challenging economic contexts and challenging geographies. It sort of takes into account that we don't actually really price in the cost of doing business into our day-to-day lives. Hence, we have a climate crisis. It tries to basically make or enable people who otherwise are focused just on solving a first world, problem to, have real positive social impact in other parts of the world.
And that's what it's done for, for me and other members I've met through the organization. It starts the conversation because, as a founder who's very pragmatic, very hardcore capitalist all the way, capitalism solves all the problems, but it's powerful to kind of hear. And I think it'd be great for you to share just like the strategy that you guys have in terms of impact. Because this is, one, you gotta go inspire people to commit capital. And that's a story that we can kind of talk about on the fundraising side. And then there's the allocation strategy. Is like, how do you maximize the impact of those dollars to appeal to what would probably be the most, savvy and committed and involved, donors who actually can, like, just as you were, like, trying to hold these charities accountable. So it's a pretty high bar that you live up to. So
definitely.
Let's start with the fundraising. So it starts with a pledge. Founders, before you materialize the wealth and to start the conversation, it's easier to kind of give away what's future paper money. But that event happens. So you have 2,000 members. How many actually have had liquidity? And what's that experience like, kind of raising the capital for, you deploy 1.3 billion. Like, that's more money than, the majority of any founder that will ever have been on this show or other, raise money. And that's just like business as usual for you. So I'm just, curious, how do you go about, like, what's the experience with that pledge to actual liquidity?
Yeah. So our sell, the thing that we are, providing to people that they otherwise can't get elsewhere, is that we're going to help you give better than you could do on your own. And not just in like a tax efficiency planning way, but in a, what do these dollars, pounds, euros actually accomplish in the world? And it turns out to be really hard to impact the world in a meaningful way, in like a causally attributable way. And so we take the approach, in the same way that lots of investors do, that not all organizations are the same. Some are much, much better than others, and some are better yet than even those, right? There's like real outliers here. And our focus is on finding the absolute best organizations in the world, tackling the absolute biggest problems at scale that also need resources. So we sort of look at this this issue from like a scale, tractability, neglectedness lens. Scale being like, what's the TAM of the market that we're trying to address? If it's big, then it's something that we should probably focus on. Do we think that this cause area actually has solutions that could make it better, like solve the problems that pervade? And if that's true, then the sort of third and maybe most important question is it neglected? We're really interested in sort of driving marginal value, and we sort of take a utilitarian frame when we think about charity, which some people are immediately allergic to. But I think thankfully we are not like strong utilitarians. I call us sort of humanistic utilitarians, like really sort of intention, sort of philosophical frameworks, but actually does describe us quite well. This idea that we should really seek to deploy our resources in a way that is going to change the makeup of the problem, or like potentially provide solutions. So we can find a really high scale issue that has really tractable solutions in it, but is extremely well capitalized, such that if we put more money into it, it actually isn't going to really do much. So we want to think, on the margin about our additionality. So to what extent is our next dollar, pound, euro going to affect this cause area, this intervention, this organization in a way that actually leads to more good stuff? And if the answer is it displaces someone else's money because they, the cause area is already extremely well capitalized, or the charity is like, has a bunch of big backers, and you've heard that, Bill Gates supports it and all of Bill's friends support it. And then the question becomes, well, if Bill is supporting it, he's probably supporting it to the extent that it needs support. Then if we're piling in our money behind his, maybe we're actually displacing someone else's less smart capital with our smart capital. And so we sort of try to think with this mental model that, like, even if it's not true, the way to think about it is if our money is really smart and everyone else's is less smart, and we put our smart money into an area that moves someone else's dumb money or dumber money out of it, then we are actually potentially causing harm in the world. Because if we take this sort of marginal value mindset and then find the next best thing that we could support that is neglected, we're actually going to do more good potentially than would be the case if we funded this more exciting thing that is really well capitalized.
So ultimately, this is the product. Like, this is what
the product is, helping people give better, right?
Yeah.
And so, we're a team of about 75 now. Half of that is spent on helping people give better, both in terms of getting them to donate in the right way, to the right structures, to all of the grant making everywhere in the world. So we're unique as far as organizations go, in that we're sort of geography agnostic. So we operate in 40 countries. We deploy capital everywhere on the planet. We don't sort of think in terms of national lines. And so we enable founders in California to deploy capital to charities across the global South and still get tax relief in California. And we do this, and we can do this because we are working with a relatively small, user base. So there's lots of organizations out there helping people give to charity, but all of them are taking this sort of mass market approach. They're focused on, the $1,000, $10,000 donations. And for us, we're focused on sort of the $1 million, $10 million, $100 million donations. And because it's such a sort of smaller group of users, as it were, and we can provide them with a lot more support than would be the case otherwise. So the process from pledging to deploying is typically someone pledges, Series A-ish, sometimes a little before, sometimes a little after. And then they can engage with our community in the way that they'd like as they're running their business. Some founders are like really sort of laser focused, nose to the grindstone, and just don't have the capacity to really engage with much of what we do until much closer to a liquidity event. But others actually find a lot of value in our community. So we do about 30 events per year all over the world. These are aimed at bringing our members together and sitting them around a table with thought leaders and experts, practitioners, charity CEOs, policymakers, and helping them understand the context of a set of issues that may be important to them. It's not sales, there's no fundraising, there's no asks, but it really is about helping people to get a deeper, better, sort of more high resolution understanding of what are the biggest issues, how are they affecting people, what do solutions look like, and what are the problems in implementing those solutions. Yeah. And then that sort of...
And I would just say there, like, as a person that's been to the events, they're incredibly mind-opening, but it's also like, it's interesting meeting some of the other members. Like, you have some of these people that have materialized. They've had these, monster outcomes that we all aspire to. And then you have people that just made the pledge. People that are, passionate, but they're still grinding. And, you bring these people together. You have these really thoughtful conversations, and, it's a great network expansion. But, when it comes to, it's something I want to highlight for what I think is fascinating about Founders Pledge, not only the impact you have, but effectively it's like how I define it. It's like you have 3 different products you fundraise for. And I would like to talk about just how you think about the fundraise for each one of these. So the first is the actual organization Founders Pledge. You have an operating budget. Then you have the actual capital deployment. So it's getting money out of people's bank accounts or their donor advised funds into actual causes. And then you have a venture fund, which, maybe we start there, which is, you've raised, I think it's a $50 million follow-on fund, or like a fund that,
53 million, yeah.
Yeah, so $53 million venture fund. So I would love to maybe start with that.
Sure.
So I'd love to start with the venture fund in terms of like, how did that, you have this kind of, the nonprofit, and technically the venture fund has a nonprofit as well in terms of what the proceeds go towards. But I think it's just fascinating. You've created these products for your founder audience that everything relate. It's very easy for someone like me to be like, makes sense. So maybe talk about what it's like for those 3 different products you offer, and starting with the venture fund in terms of raising capital.
Sure. So the venture fund, it's important to note, is actually like extremely independent from Founders Pledge. My team would be upset if I didn't mention that. So it's an independent venture fund but it has like a really deep relationship with the Charity Founders Pledge. And to understand the venture fund, you have to sort of understand how Founders Pledge is funded. So I'll start there because it sort of maybe makes a tiny bit more sense. So everything we do at Founders Pledge is free. There's no cost. There's no business model. There's no membership fees or dues. We don't take cuts, commissions. It's like extremely loss making, on the order of $10 million per year. And what that means is every year I have to go out and fundraise and raise the year before, ideally, at least the operating budget of the next year. So this year we had to raise $10 million. We're just nearly there. And it's hard, right? And it requires me basically spending half my time talking to people about what we do and trying to get them excited about funding our mission. And people fund us for a host of different reasons, but I think the most exciting one is when someone wants to give to charity, they can give to charity. They can give to any charity they want. And if they $100, you get $100 worth of impact from that charity, potentially. So it's a 1-for-1. If you give to an organization like ours, we call a meta charity, in the same year that we raise that money, we help our members give, on average, 20 times more than what we cost. And so you can give $1 to a charity and get $1 worth of impact, or you can give $1 to us and in the same year get $20 worth of impact. It's a 20x multiple in year. And if I said to you, Jason, hey, I've got this new business and it's going to 20x your money in 12 months, you'd probably wire me money same day, right? Or at least same week.
Is it that easy though? Like it's a great narrative, but like
no, of course it's not that easy. I mean, but that is the truth. That's the narrative. So once people are like, wow, that's pretty incredible, then we dig into like how that works, why it works the way that it does, how much of it is attributable to us, and it turns out that the majority of it is. And so we basically leverage up cash that is going to charity to get more money to charity would be the case otherwise. And not just more in the sense of volume, but more in the sense of impact as well. And that sort of comes back to this idea that when we help people give better, we help them give more, and we help them give more effectively. And so that's one of the frames for fundraising. The other is like, you've gotten value from this community, you've used our services, you've sort of leveled up your thinking, you use our sort of infrastructure to deploy capital seamlessly globally, and you like got it for free, and it's better than what you would pay for if you were going to one of the commercial shops that do similar things to what we do, but not at all vertically integrated. And so people want to support us. They feel, like they're paying it forward for the next generation, so who can also benefit from it for free without any obligation. And then I guess the final frame is people just like community, and they want to be around people like them, and not just in the same sector like they do B2B SaaS or like consumer tech or climate tech, but people who do something in technology and have made this commitment to give back to the world when they have success. And I think that our community is so special because every single person that's in it has the exact same skin in the game. They've all made a pledge. Sometimes the pledges are bigger than others, but everyone's made a pledge. And so it's free for those reasons. And I fundraise typically through donations, but this is sort of subject to shocks. I'm a single point of failure within Founders Pledge. And this became exceedingly clear in the summer of 21. I was crossing the street having left a meeting in Shoreditch, and I nearly got hit by a bus. Like really, actually nearly got hit by a bus. An American in the UK, I looked the wrong way on my phone, and a bus honked, and I stepped back just in time. And it was like a really near miss. And it shook me basically. I was like, fuck, that was nearly it. I'm not sure I'm allowed to say that word here, but you can believe it.
Matter. Yeah, we're all adults.
Yeah. So I took stock later that day. I was like, what would have happened if I had died? My family would be sad, of course, but would Founders Pledge survive me? And the answer was not really clear at that point. And the reason is not because it's, I'm necessary for the day-to-day running of the organization. I'm not. My COO does all of the hard work. She's amazing. But because I bring in most of the money to keep the team paid and the lights on. And at that point, I sort of realized that if this didn't change, at some point in the future, we were going to have an issue. And I sort of had this aha moment where I was like, well, typically the journey goes, someone, gets value from us, has this exit, donates to charity, appreciates what we've done and then donates back. So we are like sort of down the waterfall of distributions, as it were. And my thought was like, what if we were higher up the waterfall? Like, what would need to be true in order for us to participate in the success of our members alongside them? And it was like just a jump from that to, well, we should start a venture fund. We should invest in our members' companies at really consequential moments in time and see the upside accrue to the nonprofit. And so it was an idea that captured me. Like, by late 21, I was like full steam ahead with this idea. If you remember then, money was still free. People felt extremely rich. Markets were flying. And I had, a bunch of conversations with our members to say, hey, if I said I want to invest in your company, I've got $5 million of cash sitting on my balance sheet. I definitely did not, by the way. But if I did, like, would you let me into your next round? The answer was sort of universally yes. I had one person who was unsure, but I spoke to 50 people. And it soon became clear that like there was something here. And those 50 conversations turned into like 45 LP commits without a deck, without a structure, just like, this is amazing. You should do a fund. I want to invest in it. Put me down for $1 million. And it was like, oh, wow, there's something here. And it turns out that a charity starting a venture fund is actually like pretty atypical and not really a thing that has ever happened before in Europe. And there's versions of it in the US that are great, but we're a UK headquartered org that operates in the US. And so we had to basically start from first principles and create this structure, which took a year. And like many lawyers, many accountants, lots of grind, basically. And by the end of it, by sort of late 22, the world had changed, and my $75 million of LP commit was actually more like 15 in a changed world where money isn't free and people who are still extremely rich feel much poorer. And so we started again, basically from scratch. And fundraised, at the end of the day, we closed the fund in April of 2024 with $53 million. And all but 4 of our LPs are members of Founders Pledge. And the tickets ranged on the low end from 50 grand. We had a feeder vehicle for smaller tickets, but technically our minimum was 250 to the high end 10 million. And the model, and this model is so interesting to people because it combines sort of 2 things that are historically in tension, or like typically in tension, which is like doing good and making money. So it's a rules-based fund that invests in any company that ticks our 3 criteria. And criteria are, one of the founders is a member of Founders Pledge, companies raising $20 million or more in a Series B or later, and there's a tier 1 fund participating in the round. And so, basically it's like, let's, build an index in the top decile of our community. We know it's the top decile because the Sequoias, the Index, the Excels are backing them. They're raising a late stage round of a minimum size, and they've committed to giving back, which sort of speaks to their ambition of scale. And people let us into their rounds, which are almost always oversubscribed because we donate 85% of the GP carry to charity. And not just any charity, Founders Pledge, a charity that they're already involved in. And so it creates this like really nice virtuous circle whereby they're going to raise money already. Maybe they'll take $1 million or $2 million less from their lead and take capital from us. And when they have success, that primarily accrues to a nonprofit that they are already involved in. So despite it taking a while and fundraising, maybe in the worst market ever to do a first-time fund, we raised $53 million.
No, I'd say you've done just a master of fundraising. One, you create a great product. I think that's the architecture of your
that's the key to everything, is have a good product.
Yeah, that I think is killer. The fact that you started a fund that you get allocation because it's already existing members. It's a carrot for people to join and be a part of the Founders Pledge. Not every can't do everything, but it's just like a nice to have as far as a member being the founder making the pledge. But you also de-risk the investment in terms of getting into the hot deal. As your post Series B, it's usually mature enough, likeliness of failure is reduced. You're not going to get the maybe the 100, 200x return, but you're not going to lose money. And LPs want it because it's still a 2 and 20 to them, but it makes them feel better. It's like
and they're also going to make a lot of money. Yeah, ostensibly, if Founders Pledge is successful, so are they. And it turns out that the majority of members who've who've invested in the fund have also pledged back a meaningful portion of their returns. So there's, it's like it's a double tap basically, and it's small tickets all in. I mean, we aim to invest in 60 companies in Fund One, extremely atypical for a growth stage fund.
Yeah.
But our tickets, our average ticket is just shy of $1 million. So we're not writing big tickets. So we're not crowding out, meaningful funds or lead funds or even small funds. We're small fry in the scope of things, but we have a lot of small fries, and it makes a full meal at the end of the day, hopefully.
You're likely having trouble raising money or selling your company. Personally, I've had 4 exits and I've raised over $145 million. If you want a free coaching session with me, just like, subscribe, and leave a comment down below letting me know what you think of today's video for a chance to win a free coaching session with me. I'll select 3 winners every single month. You just have to like, subscribe, and leave a comment down below for a chance to win. Now, onto the video.
And so I just think that, with your experience in fundraising, and we didn't get to kind of the separation of, we'll call it church and state, of Founders Pledge, raising money. You have to go out and raise 10 million every year. So it's like, as a founder that's raised, 40, but over multiple periods of time that lasts like a certain amount of time, I have revenue coming in to offset that. And now you have some revenue coming in from the fund, but part of that, you're having to go out day after day and just raise money. What's your process? Like, we've kind of talked about the message, but like, what's your fundraising process to open these doors and to raise this capital?
So, I mean, the first piece is like, as you said, have a product that people want, a good product. And, and we do, I think. And the next is like, find people who actually align with your vision of the world, who are interested in not just giving to charity, but giving to charity as effectively as possible, doing the most good that they can. So everything we do is free. We're extremely explicit about that all the way through the journey. But when someone asks at the end of the day, having just worked with us and donated $10 million, like, what can I do to support you? We say, if you've gotten value from us, then you should give back and enable the next generation to. And 90% of our donors are our members, but not because they're compelled to give, but because they choose to, because they want to. Then we have a small cohort of people who are just interested in sort of like finding the very best giving opportunities in the world, and see us as just a machine for leverage. And so almost all that we do is built on sort of network and basically getting our members to become our ambassadors and our evangelists and connect us to other people in their ecosystems and their worlds who they think would get value from working with us. And we never start a conversation with, how much do you want to give to us? Or like, here's what we need. We start the conversation with, how can we be helpful to you? Like, what are your problems as they relate to the things that we focus on? And like, maybe we can be, useful for you. And so sometimes we'll spend years, adding value before there's even like an iota of cash that comes our way. But it turns out that when you focus on providing value to people really authentically and objectively, and I'll sort of double click on that. Founders Pledge is not for everyone. We have a view of the world that is, we should aim to do the most good possible. And some people, bless them and respect to them, aren't really interested in that. They're interested in like giving to their local stuff, the things that they can see and interact with because it feels good to them. And that's fine. No value judgment, but typically those aren't the people that are going to work best with us. But our objective focus on impact above all else means that we don't really pull punches when people ask us, hey, what do you think of this organization? Or like, where should I give my money to? We're going to tell them the truth, not necessarily what they want to hear, but the truth is we understand it. We see it, what the data suggests, at least. And that focus and objectivity and like monomaniacism about impact really sort of sets us apart, and I think creates the authenticity that people get and want to get involved in.
Yeah, it's a contrarian product, I would say. What's traditional out there, and polarizes maybe some people from participating or not participating. But I feel like it's necessary to build an organization to the scale that you have. 75 employees for a nonprofit. That's a huge, accomplishment that and to deploy. I think you said 1.3 billion since inception. Which how long has it been for you guys? 10 years, 12 years?
10 years. Yeah,
10 years. So 10-year anniversary. 1.2 billion, pretty solid. But
hopefully 10-year anniversary is sort of early next year, and hopefully we're closer to 1.5 billion by then. I will say one thing about it is, so our research, our advisory, helping people give better may not be for everyone, but the pledge itself, this idea that everyone should be giving back, actually is should appeal to everyone and everyone can participate in. So it's worth mentioning, we don't keep a list of charities that you must give to. Anyone who joins Founders Pledge can give to whatever they want. They have total agency and control over their resources, and they don't need to follow our advice. They also don't need to listen to it if they don't want to. Some people join for the community and that's it. Some people join to use our donor advised fund because it's, global first and zero cost, and don't really actually want help in figuring out where to give. And some people just want help in figuring out where to give. So it's different for each person. And it's sort of like a buffet in that sense. People eat lots and leave the rest.
And so one thing I just want to, point out, because we've had amazing founders on the show, and predominantly always commercial, for-profit businesses, and we talk about fundraising as a journey. And one thing that I'm picking up from you as you talk about the journey you've been on, it's expanding the network, building your network, adding value for years, and establishing that trust and that rapport, and demonstrating the value. But at the end of the day, it's like, I talk to some founders, I got to run a process, create a bidding process. It's such a different game where this is such 100% relationship based, which is really how the best fund managers in the world operate. They just have been in the game long enough to where these relationships start to materialize. And, I'm curious, as you look towards the future of Founders Pledge, like as you look probably at your up into the right graph of capital deployment, kind of what's the velocity that you guys are at now? What does the next couple of years look like for Founders Pledge?
I mean, every year we give more to charity, and it seems to be, even in the last couple of years, this will be our best year. Last year was our best year. The year before was our best year, despite the markets going pretty sideways and making liquidity extremely challenging, right? And so even in this bear market, we've grown both membership, pledge value, and capital deployed. And, in the next couple of years, we want to be giving about $500 million per year. So it's, growing 100% in the next 3-4 years. And it doesn't look like there's any rate of slowing or any upper limit. We have 2,000 members, of which a couple hundred have had liquidity. Call it 250 to 350. I actually don't have the number off the top of my head, but somewhere in there. Not all of them have had full blown exits. Some are secondaries. But that's scratching the surface of the sector. There are so many founders who are not part of Founders Pledge, and so much wealth that's been created that has then, for one reason or another, gone into a donor advised fund or a private foundation that then sits there, sometimes forever, without actually getting donated to end user charities, because the sort of principal wealth creators are either still running their businesses, busy, focused on investments, enjoying retired life, and aren't really interested in engaging with the mental cycles of how do I do this well, and get into this sort of analysis paralysis or fear state where they're just I'd rather not even focus on it. I've gotten the tax break, I'm just going to let it sit there. So if you think about what the future looks like for us, it's unlocking this nascent market where there's billions and billions and billions of dollars of philanthropic capital sitting doing nothing that could get put to work. But for a lack of focus, a lack of clarity, and not enough time.
Sometimes a lack of trust in the institutions that they're aware of.
That's the thing that is real, by the way, and it should be real.
Yeah. And we had another guest on the show, Patrice Brickman, who you're focused on the drawdown of DAFs, actually the deployment for good. And where her focus on expanding on the dash was growing for good in terms of deploying into impactful organizations from a for-profit perspective to grow the assets under management. But at some point, it's got to go out the door. It's got to be deployed and put to work. And there's just so much of that cash just sitting there, not being, just accumulating and making fees to the the wealth managers, which I think is kind of the key differentiator you demonstrated. It's like you can get a DAF for free with Founders Pledge, and not have to have those 100 bips taken every year for management fees. I think actually at lunch today,
the DAP is free for our members, but it costs us money to operate. So it's like everything we do, it's a loss leader. And so if you think about what incentive this creates, we want to get money out the door. The more we have, the more it costs. And not that we pay bips for people, but their salaries. And our incentive is to get money out the door, not to aggregate and grow AUM. It's the exact opposite of what we want. We want to, our metric of success is how much did we donate in the year? And if that grows year on year, we're happy.
How do you measure the impact of the deployed capital? Since it's not necessarily a return on investment in terms of cash, it's a return on saved lives or improved quality of life. How do you look at the actual measurement KPIs of the capital once deployed?
Yeah, that's a big question. And for people who want more in-depth answer, our website has a trove of information. There's no paywall, so you could just go to our website, and all of our thinking, all of our writing, all of our research is on the open internet. But the basic way to think about this is we spend typically a year looking into a cause area to find the right interventions that we think are going to do the most good, and then the charities implementing those interventions who are doing it most effectively, who can also absorb capital. And if we take something like global health and well-being, typically what we think of as poverty alleviation, giving to Africa or Asia or South America to help people live better, healthier, happier lives, we're looking at either averting disability-adjusted life years, sort of reducing the health burden of people, or improving their quality of life and happiness. And we are typically looking for interventions and organizations that have extremely robust evidence to support that what they do actually works. And practically that is randomized control trials or pseudoscientific trials that enable us to draw a causal link between what an organization does as a intervention and the result of how people's lives have changed having experienced it with a control to like account for maybe the country just decided to implement this new program and there's some sort of noise that's making signal hard to understand. So we rely on RCTs to really understand what's the best thing to do. And so when a charity is implementing an intervention that has robust RCT evidence in a way that is transparent and sort of clearly understood with good reporting, using technology and really high cost effectiveness, then we can say that we expect a donation to this organization, $1, to result in X units of impact in the form of DALYs or QALYs or WELLBYs or some other sort of hybrid metric. So we can really say in a quantifiable way for at least global health and well-being interventions that you're going to be getting X units of impact per dollar input. Very few organizations can say this. And so when we think about success, we try to find the organizations that are doing as much good as possible. So there's a bunch of different metrics, but we try to normalize to make it simpler for people who don't have PhDs in this space to understand. And so we take a benchmark organization that's really, really very good called Give Directly. Give Directly does unconditional cash transfers to the ultra poor and low income contexts. It turns out that giving cash to people in places where they don't have it and need it to buy stuff for their lives actually is one of the most effective ways to improve their quality of life. Really, really highly evidenced and extremely robust evidence. And so Give Directly is our benchmark. And so we consider something to be high impact if they are at least as good or better than Give Directly. And our top charities in some cases are 70 times better than Give Directly. That's not to say give directly is bad. They're amazing. Like if you can't do better than give directly, you should give to them. They're wonderful. But some organizations are even more wonderful because of the areas in which they work, the contexts that are challenging, that people are starting from such a low point that like helping them improve by 20% actually is just like a vast quality of life improvement. And one of the areas that we think about a lot these days is like increasing people's income. So income doublings is the term that we use. So it turns out that anywhere in the world, if you were to double someone's income, their life would be better. Well, maybe with a couple of exceptions at the high end. But like if I said to you, Jason, hey, I'm going to double your income tomorrow, you'd be like, awesome. Now I can give more to charity. And it's the same for you and me and someone earning $2 a day. Someone earning $2 a day, suddenly $4 a day, their life is markedly different. Their kids' lives are markedly different. And so we try to find these sort of intervention spaces that are either going to like increase economic mobility, increase income, reduce health burden, increase happiness, increase consumption, so that sort of stuff.
No, I think it's incredibly impressive. It's an amazing organization to which I'm a member of. I encourage other founders to explore the idea of what giving means to them. And there's this whole post-exited founder paradox of like, you get a very large check in your bank account. You no longer have a job. You no longer have your identity. It's like, what now? And I feel like this is the potential to be an anchor for some people to have a bit of focus post-exit of knowing that they have this commitment. It could be something that they could work towards as you can do a million other things. You're not giving 100% of your wealth away or anything, but it just gives like a sense of, meaning, direction, and an activity post-exit because
a community.
You grind for years, 10, 15 years as a founder. You might have forgot you made the pledge, and then you like come back to like, you kind of have this new world you're exposed to. We just had a dinner last night with 50 exited founders, and there's a bunch of them that just happened, in a couple of months, and they're just like, the smartest, most capable, super intelligent, like tons of energy, and they don't know where to direct it. And so for the founders where you're in the grind right now, and you don't necessarily, can't even think about what life is like at that point, taking just a little bit of time to understand like an opportunity like this. I'm doing full hardcore pitch to Founders Pledge right now. Being a big believer. To just explore the idea of it. And so when you're out of that grind and you're on to, exploring what's next for you, you have this opportunity and that kind of feel good impact. Because in most exits, there's a material amount of capital gain, that you don't know what to do with. Like it's hard to really know what's it's such a monster. It's not doubling your wealth. It could be quadrupling, 10xing.
It's a lot more than that.
So, David, where's the best place for people to find information on Founders Pledge for them to learn more?
On our website, founderspledge.com.
Easy enough.
Easy enough. There's lots of information there. If you want to join the pledge, we want to talk to everyone before they join. So get in touch on our Learn More forum. You'll have a call with one of us. And, we just want to chat to everyone before we invite them to join. Make sure, they're joining for the right reasons and we can add value for them and they can, sort of benefit from us. Would love to see some new faces.
And some, kind of consolation opportunities that come about are all the events that you do, bringing these founders together that, like I said, are just made the pledge, still like Series A level, still in the grind, to people that are very comfortable living very amazing lifestyles and have this amazing wealth of knowledge that you get to be together with, and you get to talk about these topics and kind of bring these people together. And so very smart people that talk about the impact of the pledge you guys use. So if you're selfishly, if you think selfishly as a founder, you got to have some kind of value add benefit to participate. There's at least that. You get to kind of build your network and meet some other amazing founders. So be sure to check out founderspledge.com for those listening today. David, really appreciate you being on the show. Really appreciate all the work you've done. It definitely is amazing to kind of see the scale that you've been able to reach. And I know the full story, the full grind of how it got here, but amazing to see it. I'm glad we got to share the story.
Thanks, Jason. Really appreciate you having me, and I appreciate your advocacy as well.
All right. Awesome. Thank you.
Thank you for watching today's episode. As a reminder, I'm your host, Jason Kirby. I have built and sold multiple companies with over 135 million in transactions as either a founder, operator, or investor across multiple industries. I'm currently the managing director and founder of Thunder.vc, where we help companies and founders at all stages navigate what capital to raise and who to raise it from, and help improve companies' odds of raising the capital. If you need help, reach out to us at help.thunder.vc. If you like today's show, please share with your friends, give us a like or a comment down below. And as a reminder, this show is published weekly. And to get notified of new episodes and our newsletter, be sure to go to our website at join.thunder.vc. And if you sign up today, I'll send you a few freebies on how to negotiate a term sheet, how to get a free list of relevant VCs, and much more. That's it. No more shameless plugs. Thank you, and see you next week.